Hello guys, I am just a little late, like 3 or 4 minutes. I'm sorry for that. So for today, it will be a big day before Christmas, and just because of what's going on in the market. As you see me all these days on YouTube, I am emphasizing on the bear market, and we see if we are really gone to that limit. Now, in the stock market, like in the news, CNN and the other, they don't speak about this correction, or what we call retracement, or whatever they call it. They don't speak it in terms of technical analysis. Now, they have only one thing, which is okay. They speak always about year to date, and I have explained this year to date before. Now, what does it mean year to date? So just bear with me 1 minute. So year to date, it means that they compare this year with the last close of last year. Last close, it means they look at 31st December. It means the last close, the last day we have trading before January. Now, that is the most important number that in the news they take account, and they say always year to date. So I have made pay your attention. I have made a video just a few days ago explaining what's the difference between year to date and the correction that I'm speaking about. Okay, so there is a big difference. Now, a correction is when there is a reverse of the trend. We have a very, very big trend. Okay, so this trend in the last January, this trend stopped. It means it was a bull market trend. It was for 1 year or two, it was going so good. And most of the people, even the people who just invest in some stocks like in Dow Jones or S&P 500 or whatever, they should have made money, okay, on 2016, 2017. But 2018 was a big problem because of this correction. And I always use the same word, correction. There are some other people they use other words like retracement, like there are other words that you can use, and it's in general it's the same thing. Okay, so so from now on, hello Wiseman, Merry Christmas, how are you? Thank you very much. How are you, free trader? Thank you very much for coming. What did happen, the free trader? You say, I hope we are all safe. Now we have some snow, but you know, whenever we have snow and then after that we have rain, so we don't have it for long, just 1 day or two, and then all disappear. Okay, Merry Christmas for all of you guys. And as I told you, we should be aware of these two things. At least when you watch, for example, the news, you understand what they say, because whenever they say, for example, Dow Jones is minus 2% for the year, it means they are speaking about year to date. They are not speaking about correction, because correction is something that traders like me, you should see it because we see the real thing. We don't see the end of the year, the beginning of the year. It's not so important as what did happen. Okay, so what did happen really is the most important thing for us, because this what we base ourselves and see what's going on in the market. Okay, so in this session we try to see what's going on in the market for this last 1 week or two, and then we go and do something very, very important, which is to see what are the solutions. Now, these solutions, I have given them on Saturday before the correction. It means before the trend stops. On Saturday like this, I have spoken with the same thing. Okay? And I say, if the market is going to a bear market, we should use these solutions. But the whole year, the market was just going up and down and zigzagging. So there is no much to say about the market. And this makes the market not the same as before. So before, if you remember, 2016, 2017, I will show you right now how the market was so good, and we were in the bull market. Everything is going up in most of the cases, and then by February, 2 weeks of February until the 9th February, things changed dramatically into the market, and the market is not doing that good. Okay, so we will go to that, and then I will explain, like in general, I will explain this this correction, and if we go now to the bear market, what are the things that we should do? What's the thing that we'll focus on? Okay, because it's so it's not as simple as before, because now the market is troubled, and for me, I thought that maybe we have a gap down in the whole market. A gap down. Why a gap down in the whole market? A gap down in the whole market because if there are huge people, investors, some mutual funds, they sell, okay, it will be a very big thing, and the market will be hit. And then if it is hit, the continue will begin really the bear market, and it will continue like this. We don't know how it will change, except where the guys, the Wall Street guys who are doing all that stuff, try to change the whole market again, because they can't do that. They have done it. They will do it, and they are doing it right now. Okay, so nothing is possible in the market, but the problem here is always to be focusing on something that you can make money right now. Okay, so we are not anymore interested. We are not anymore interested just to see opportunities going long, because even if you go long for some and you just begin to make money, and then this mood of the market that it is going bad, it will affect the market. Free trader said, safety about the market, blood on the street. Yes, you are true, but understand, free trader, blood in the street is for investors. Okay, It's not generally for traders. Now, if you are not going to do some changes in your strategies, it will affect your strategies, your way of thinking, and your opinion about the market. If you are always thinking to go long, and you always have this idea, there is no other idea, this you will be faced with problems. Okay, so that's why you should try to think about other things. Now, these other things, we will speak about them right now. Hello, Vincent NC. I haven't seen you for a long time. Thank you very much for coming. Vincent said, the year is almost over. If you don't mind, I'm asking, how well did you do this year so far? You mentioned your average around 40 each year, but just want to know. No, this year I get hit with this Twitter and Facebook. I was hit with the big thing, but I am almost 20%, so I am good. Although the market is so bad, but I am still doing good because lately I have begin to see the other way. Okay, to see selling short, put options, and the other stuff that I am speaking about, because all this year I have seen some good trends. I have been into some good trends, like in Facebook, like in Twitter, like in other kind of stocks. Very good, 3 months, 4 months, 5 months, but still, there are gap downs also. Although we have gap up, but not that much this year. But the problem is that this year we have volatility. It means stocks don't do any more long trends. And this affects everyone. If you are going long and you make 10%, 20%, 30% in the stock, and then one day or two you lose 10% or 15% of your money, of your profits, it means the way of the market, the mood of the market is not showing you any long trends. So you should avoid those. And you try to do short trends, and you be careful not to stay longer and longer. Okay, if the stock is doing good, yes, you can stay. But if you see the stock is not good, you should always put stop loss. Okay. Penny Camus, you say, hello Karim, thanks for the info you give. Thank you very much, Penny Camus. Vincent said, the trend is bearish. I short the market the whole week. Yes. Listen, I will, Vincent, if you go to Russell 2000, I have showed you in the videos, okay, of YouTube from last week, that it is so bad. The worst was this Russell 2000. So I shorted Russell 2000, okay, as an ETF, and I will put this for my subscribers for this weekend. Thus, they show what I did. I did 2 day trades, one going long, although the day was down at the end of the day, but in the morning it was good, so I made some money. And I made another video about day trading, shorting the index, the ETF, and I will post this video also in my subscription for this weekend, because I will just show them how it is feasible. It means how it is feasible, and it's very easy. It's not a big deal. You should just concentrate on the beginning of the day. Okay, either you snap some money when you have you see something which is very, very strong at the beginning, you just buy heavily, you buy heavily, the stock is going up, and whenever you see some money, you just try to sell half or 75% of your shares, to sell them to sell them all, and to leave just little at later. If things go worse, you just go with a stop loss and you exit, but your profit is there. This is what I do always. Okay, so either as a day trader or as a swing trader, you can just swing also for a few days with shorting the whole index with ETFs. Thank you very much, Vincent. You have done right. And if you have chosen Russell 2000 as a major index, you will be making more money than S&P 500 or Dow Jones, because S&P 500, Dow Jones, they go slowly, although they go down, but they are late. Now, for me, I was looking at Russell 2000 because it is lighter. It was going so good before, and now it is doing worse. Because it is lighter, those stocks are manipulated easily because they are small. And S&P 500 and Dow Jones, you see that are heavy because they are big companies. Millions and millions of shares. So if you are going to the people, if they're going to short those stocks, they should be very bigger hedge funds, and there is a sell-off in the market to move those very powerful. Okay. Now, Knights, how are you, Knights? He say hello everyone. Hello everyone who are here. Knights said, what the best strategy to use in this market called credit spread or bull put debit? Thanks. Now listen, I don't know about this credit spread or bull put debit, or I don't know what's this. I'm sorry. I'm not doing spread betting or whatever these things. We are doing stocks. Stocks are easy in their movement. It means you see the price is exact thing. It means if you buy something with $20, it goes to $21. How much you make? If you buy 100 shares, you make $100. That's it. And you take $5 and $5 for buying and selling, it will be $90. So it is exact. It is easy. Now, if you go to options, or you go to what we call options, the calculations, you can't calculate that well. It is so difficult. So the software of this options, because it has complicated things inside, so it will give you the price. Okay, so it's not exact. It's not the stock goes $1, your option will go $1. This is not gonna work. We never work like this. Okay, so be careful of that. And for me, I'm not doing some stuff like what you say, credit spread and bull put debit. I have no idea about those, and I don't do that. So we are doing simple things with stocks. As you might know, if you are new here, you can follow my videos. We are doing almost stocks, options also. Okay, so sorry for that, Knights. But we are doing also put options or call options. Okay, but you don't have to calculate these things because they are calculated for you. But in stocks, it's very easy. Very easy. You can calculate by yourself. It's very easy. But options, you don't calculate, because whatever you calculate, it's not the same. Because there is no when the option go up or go down, it is not the same as the stock. Although it follows the stock, but it is not the same. Okay. So maybe if you are interested to know about put options or call options, you should see my training level 14, which is how to trade call and put options. This will give you general ideas. It will give you all what you should know about options and the basics when you see that. And then trading, you can trade as my strategies are as going. Okay, so it's not a big deal. So Vincent, he said, what is the ETF for shorting the Russell 2000? Now, for Russell 2000, there are many. Now, I will explain, Vincent, later this, because I will need to explain more and more. So I will let your question, whenever we go to shorting, I will give you some information. So you said, I know IWN is the ticker of Russell 2000. No, it is not the only one. There are many. Okay? There are many. I will show you later about this ETF. Knight said, I do option. I still have small account. Can't afford big stocks. Thanks. Yes. Listen to me, Knights. How can you trade options? You should look at the chart of stocks, because the option follow the stock. Yes, I know you have small account, but I didn't say to you that you should do stocks. No, you stay in options, but in options the risk is 100%. It means when you put $100, you risk it all. In stocks, wherever you put, you don't risk all your money. You risk just small part of the money. Okay? And in order to do options, you should follow stocks. This is how we trade options, by trading my strategies. It means we follow our strategies, and when there is a buy, we buy. If we want to sell short, we can use put option. This is how we use the stocks, but we do options also. Okay, that's why I told you training level 14 is about that. Now I will put the let me see here. I will put my my website. Okay. At least you can see, if you have time later, you can just go there and check. And if you have question later when you finish, you can send me an email, and I will be answering your question. Okay? So, Penny came and said, where can I see the put and call options table? Oh, it's, I don't know, Penny Camus. It's very simple. You should go to your platform and see where there is the it should have something like a chain, or it should say a chain, or it should say a trade, or whatever. But if you don't know, what I ask you, maybe on Monday, because I think we have stock market on Monday. You can call your broker. You call your broker, and you ask him where to find those. Okay, because I don't know which is your broker. So each broker is different. My broker and your broker, when they show this, it's different. So that's why I don't know. So Penny Camus is very simple. Even if someone tells you go do this and do this, it will not gonna work, because if we are not in the same broker, that will be different. Okay, So you just go to your broker. If you find someone who is chatting, you can chat with him or with her, and you just ask her which button I should click in order to see the stock options, put and call. Okay, and understand penny camus. If you are interested, you should see training level 14, because it gives you all about options. Okay, the basics, the Greeks, interest rate. Oh, I have a lot of things to see. At least you have an idea what you are going to do, and you see the risk, how much risk you should have, because in options it's not like stocks. Even if you put $100,000, it can be wiped out in 1 day or two if there is a gap down or gap up, if you are against the market direction. So understand that in options you should not buy that much. Don't play with your accounts, because options is very, very risky. So whatever you put, understand that you might lose it. So you should be careful, and if it doesn't work, you should exit immediately and don't stay until the expiration date. Okay, this is what I always thank you. Knights say thank you, Kareem. Now welcome. Understand, Knights, that in my golden subscription I sometimes give lessons in options, because we use put options now. If the market is going down, we should find stocks and we use put option against them if they are going down. So this is a strategy that I am doing for a long time, and you can check golden subscription, and you can go with us and you can follow what we are doing, because I give all the information about the market, about the indexes, and how to short the whole indexes, how to sell short, okay, and how to use options. These are the three main things that we are going to do in the future, because if the market is collapsing and we are in a bear market, we need those. Okay, so let me just take a breath. And then right now, before we begin everything, since we just begin speaking, I will show you the three major indexes as always, and I will tell you guys, always follow my YouTube channel, because daily I put a video. Sometimes I give valuable information when it happens, so you should know about this. Okay, you should know about this information, especially if we are going to be in a bear market. Okay, so we have only next week. It means we are just nearly next week to the market finish for this year, and then we begin, if God wills, we begin 2019. Hopefully it will be a better year than this one. Okay, Cheaper, how are you? Cheaper said, hello Kareem, do you think the Oracle of Omaha is buying big right now since everything is on sale? No. No, don't think so. Okay, don't think so. Who tells you that the market will stop? We just begin. If we begin just the bear market, do you know in 2008 Warren Buffett, it means his stock, it lost 50% of its value. From 195 it goes to, I think, 95 or 90,000. Okay, so I don't know what he will do. He likes Obama, no, not Obama, I'm sorry. Warren Buffett likes interest rate. He likes banks. He might do bonds or something like that. I don't know. But for those who follow this guy too much, they can see what he says about the market, because he doesn't care that much. You know, he has too much money, and just the dividend, he is living from the dividend from his stocks, which is maybe billions of dollars. He doesn't care that much about the market go down or go up, because this for him is fluctuation of the market. The market will go down, after a few years it will go up. So that's it for him. So don't confuse yourself with him, and don't follow people who you are not in the same situation. Okay? Because you compare yourself, and when he gives you an advice, this advice applies on him. It doesn't apply on you. Okay? It doesn't apply on, because he has a lot of money and he is living from dividend. Do you understand what does it mean, dividend? We live not from dividend. We are living from income. And income, we pay more tax than him. Not in the amount of money, but in percentage. And these guys, if you understand this, in the future, if you have a lot of money, it's better to go to do like him than to do something else, because you get an income. Whatever is the market, you have an income. This is what is the most important thing for these guys who are rich. It means they have those who have filthy rich, who have billions of dollars and so. Okay? So do not always compare you with him. Okay? So this is no comparison, and I will make some clarification later. So Shirley Lewis, how are you? Thanks you for coming, and thanks you guys for coming for this. This is the last live session before Christmas, and then we have another one. You know, I think before the end of the year we have another one, and then if God wills, if we're still alive, we go and we enter to 2019. So Vincent said all the FANG stocks like Facebook, Google, Amazon, Apple, Twitter is getting hit real hard. It looks like mutual funds are selling them and hedge fund John is shorting them. Yes, this is true. Now FANG stocks, it's Twitter is not with the FANG stocks. It's social media, yes. FANG stocks are like 4 or 5. Facebook, Google, Amazon, Apple, and another one, I don't know what is it. But these are the 4 or the 5. Amazon, Apple, Google, because it is the biggest companies in the tech. The biggest tech companies. Okay? So, Netflix. Yes. And maybe Netflix. This is 5. But Twitter is not with the FANG. It is just, you know, this guy... I understand that a lot of people, they don't know what's going on. This guy who is Kramer, he was a hedge fund. He was shorting the stocks, and now you ask people to go long. this is I'm not saying this is like a miracle. Okay, someone who is shorting the stocks and making money, and then he comes to the people, they say, oh, go long because the investment, and you invest, and you know this is Wall Street, guys. You know, when they don't trade anymore, they play with Wall Street, what they say. Okay, just go long and everything will be all right. Yes, but you see those stocks, especially Facebook and all the FANG stocks, they go so bad. Okay, now let's drink some coffee, because as you might know, I was having a nap. I was sleeping, so if I don't drink that much, I will sleep and you watch nothing. So right now, I will just go few minutes. We just explain to you, please guys, I will explain to you what's going on to the markets. to the three major stocks. Okay, now so please, I will just explain the general three major indexes, and I will tell you what's going on and what did they say before and what did they say now, and then we can go and speak about other things. We speak about other things are we in a bear market right now, yes or no, and we can just take conclusions. But anything that you say is never be exact and sure until we see the market shaken. Because for me right now, see, I'm telling you, I believe there is something big coming in these few days. I thought it would be today. The market is going down also, but I'm thinking about something big where the mutual funds, they make a big move and they sell a lot of stocks and they go to bonds. Okay, because they get scared and the market doesn't feel so good. So who cares? The interest rate right now is higher and higher and higher. Just last Wednesday they raised it. Okay, so they raised the interest rate again and again. It means for you guys who have never bought a house, this time it's not good to buy a house. To buy a house was from 2008 to 2009, 10, 11, 12, 13, 14. Those years where the market was down and you can have a house at let's say $500,000. You can get it for 200 or 250. Some they have what we call they want to sell their homes. There is no buyer, so they are obliged to put down their prices very, very badly in order to sell. And some people, you know what they happen to them? They lose their jobs. They can't pay the mortgage, so they lose their houses after 10 years, 20 years paying, and all that money is gone forever. Because the system here, the American system, it is so harsh. Okay, well, whatever you put, they don't give you nothing from it, and even they sell it with a good price, they will never give you any money, and that's very, very bad. Okay, so guys, let's speak about the indexes. When we finish, you ask questions, and then we continue later with solutions. What we should do now. Okay, so let's go to the chart now. In order to understand, see here, I will show you the difference in order to understand why they say year to date, and I'm speaking about correction. Okay, so I will see what is the first, let's say the first day here on the market, 29/2, Tuesday, 2nd of January. This is the beginning of the year, and let's say we are not speaking about those. We speak about the last day of 2017, which is 247.38. Okay, 247.38. I put it in yellow. This is the year to date. Here is the beginning of the year of 2000. Okay, yes, from this red candlestick. Now, in the news, when you watch the news, okay, they are speaking about the year to date. This is what we call the year to date from the last price of 2017 and the beginning of the year. You will see what the market has done. The market has done so good here, so good in 1 month. All this month is January. It has been doing so good. That's why when I make my live session here on the Saturday 29, not tomorrow, Friday. Yes, Friday it was 26. Now 27 January. I made my my live session. If you were here, if you don't, you can go to 27 January on Saturday and you see my live session. And I was speaking about what did happen in the market. Okay, now, so this line that you see is what the CNN and the other news they speak about. Okay, they speak about this line, which is year to date. It begins from the beginning of the year until now, and they see is the market is doing good, better, or worse than last year. So they compare always 2017 with 2018. But as you can see here, it was doing so good, and then it collapsed, and then it goes down. It goes up, down, up and down, up and down, up and down. Then we have this. I have told you before, this is when we have Twitter. This Twitter, Facebook, it was so good. I was here on all these 3 months. And then with what happened with the what we call the gap down, I sold everything. Now it goes down, it goes up, it goes down, it goes up. But when it is going down, in these few days, I was following what did happen. I told you that this line, yes, we are under it, which is what we call the year to date. This is what Wall Street and CNN and the other. But for me, I have another line. This line is called the support line. This what I make sure to focus on it. I don't focus on this one, because if you focus on this one, you are not going to make money like this. You will never know what's going on. But when it is confirmed that Dow Jones is going below, it means this is the bear market. So I can just show you this. Okay, I can just show you this. Just because this today, why I am explaining too much about this, because this is something new and it can affect everything you know about the market. So now this is the blue line, which is called the resistance line. Now this is the correction line, which is support line, or it is called the correction. It means the correction, what we call top and bottom. This is the correction. Now the market was doing good, and then it's going up and down, up and down, up and down. But the problem is that it goes down. It crosses the support line, which is, this is the correction. So here is the correction. Listen, there are some people who tell me that they hear other words than correction. Yes, please, there are a lot of words. For me, I say it's correction. But you can find, for example, it's called retracement. Some people called reverse. Yeah, you know, it's all the words are the same, okay? All these words are the same. Now, try to remember before the stock has gone above. And I told you, oh, we are in a bull market is the first confirmation, but it collapsed. So this is a fake bull. This is a fake bull. Now here we are going to the bear market. It's going, it's just we begin. But I don't know if it will be fake, or true. No one knows. Now, how do we know? We know when this bear market continue to go down for weeks, for months, and then we see a downtrend. A downtrend, it's the same as an uptrend, but it is different position. See, it's like this. Now, let's give you how this will work if we are if we are really in a bear market. So you see, we do the same resistance line, and this support line. Now, this is the market, this is the correction, this is the correction here, this is the bull, and when it's going down is there. Now, understand how this bear downtrend will see. Understand that it will do the same, although the pattern will be changing, but it is the same thing. What will happen? See what will happen. So the stock will be going down few days or 1 week or whatever, and then it will have a going up, and then it will continue going down, and then it stops going up. So it will do the same. This is what we call a downtrend. So downtrend is always having some reverse, but this reverse doesn't stay long. And the downtrend, this is a downtrend, how it works. At least you understand. Let's say after a few days, this stock stops and it's going up. Okay, it doesn't mean that when it go up, it's a reverse, a real reverse, and the stock continue to go up like this. It could be. It's okay. It could be, but the problem, if it just go bad and reverses and continues to go down, it means we are in a true bear market. Now, for me, if you don't mind, I'm expecting something like a gap down. A gap down, for example. Let's see here. This is just a feeling I get. Okay. So let's say after 2 days or 3 days, the market is here, and then in 1 day it goes down at night, because here, let's say some mutual funds, okay, after the market close, they sell large parts of their stocks. They sell them in the market. The market is down, and then we have what you call a gap down here. Now this is just, it could be a lot for stocks, but it could be also for ETFs. For ETFs, it means because ETFs, if there are a lot of gap downs, it will happen like this. Okay, gap downs not because of earnings. Okay, so try to be careful. I'm not speaking about earning news. Now I'm speaking about selling off. So be careful, guys, for all what you have. as going long, so be careful. Okay, so let's go again to our market. If you follow me on YouTube, I just told you here on this day, which is on Wednesday. Okay, on Wednesday I told you prepare yourself, it might be going down. Yes, on Thursday it has gone down and I made a video. Today I didn't make a video because we have live, and you see that the Dow Jones has lost 2.10%. Now here I'm speaking about the ETF. Please, Dow Jones, let's see the index. Here we say 2.10%, 1.81. Now, why we have these differences? Why we have these differences? It's just because, you know, it's because of the calculations. So it will not be exactly the same. So understand that these calculations, and don't worry about it. Don't look why it is 1.81 here and then there it is 2.10%. Don't look at this, because you just waste your time, because you can do nothing, you can change nothing. This is how the prices are done, because there are a lot of calculations in the Dow Jones, in the ETF. And the company here, it's a spider. The spiders is the family name of this ETFs. It means this company try to weigh stocks there, or how it weigh them their way, and it gives you the price that they see by themselves. Now, as you can see, Dow Jones crosses 2 days. Now, it might be having on Monday, it might having going so, and instead of saying, let's say saying Black Friday, you might be saying Black Monday. I don't know. Maybe there is a change in the always. I don't know why always they like Friday and they say Black Friday. It could be Black Monday or Black Wednesday or whatever black is. And I don't know why they say black. They can say white, white Monday. This is just colors, I guess. Now, let's go to S&P 500. S&P 500, I told you here on Wednesday that it goes a little bit down, and then you see 2.62, which is just normal as the Dow Jones, and you see that crosses, and it has 1, 2, 3, 4, 5, 6, 7. 7 days. It means 1 week and 2 days down. Okay, and this is, you can see it. For me, I was not worried about those 1, 2, 3, 4, which is above. I was worried about this one, which is on Wednesday. Why? Because it crosses down. Now, if you tell me, for example, oh, it can reverse and go up. Yes, but it didn't. It continues to go up, so the trend continues to go down. So we will never know if on Monday we have, let's say, we have a reverse. It might be, or it will be going down so badly with a gap down or so. And we call it, let's say we call it Black Monday. Just an example, okay? If we go now to Russell 2000, understand Russell 2000, it has been doing this so many days ago. So we have 2, 4, 6 days after they cross. Now, why, in your opinion, Russell 2000 has been going so bad? Because it is light. Because it goes above the resistance line before. It was in a bull market for many months. For, let's say here, May 18 until 8-10. It means 5 months it was going so good. These stocks were doing so good, and I thought this is a bull market for them. It was, but it it stops and Russell 2000 join Dow Jones and S&P 500, and it's doing worse, and you see how it is going down. For today it goes 2.60. Today is more than the other days, you see. And I expect candlestick like this or more, maybe 3%, 4%, 5%. I expect bad for the market. But, anything can happen. Maybe good news, maybe it can happen, anything. So, this is my opinion for the whole market. Okay? And later I will show you sectors later, because we are just beginning the hour. I will see your questions first, and then we can go and speak about solutions for tonight, because I understand a lot of people are waiting for that. Okay, so let me see if we have some questions before we go. Hello, Griffey, KH Griffey. The bear market. Yes, the bear market, I told you, just few days it will show itself. Okay, I don't know why they say bear or they say bull. Maybe bull because we eat it, so it's good for us, we eat its meat. But bear, we don't do nothing, it scared us, especially investors. Yes. Okay. V Cash Hold Fast, thank you very much for coming, because these are new guys, I guess. V Cash Hold Fast and KH Griffey, thank you very much for coming. He said, how do you think the S&P 500 can go? Yes, I'm just telling you. The three major indexes are going down. Especially Russell 2000 is going so bad. But this doesn't mean that it's over. We are in bear market. There is no change. No, it can have a change in the market, but we should follow. What does it mean we should follow? We should follow what we are doing in the market. If the market is collapsing, what is the thing that you are going to do? This is the most important thing I am speaking about today. And before the market, before the year ends, it means next Friday after Christmas, or in the week of Christmas, if you have time, we will have the same discussion, and we will see what's going on after next week, because next week it will be decisive. I am sure. Decisive. Why? Because this market, either it collapses and it show the bear market clearly. For me, it's a bear market right now. Okay, it's bear market. I don't care about if the stock market go up again or go down. But for me, I am prepared from last week to begin to short the whole market, to short stocks, to buy puts, to do a lot of things in shorting. I understand a lot of people, they are scared, but this is very, very easy. As you go long, you can go down. Okay, it's very easy. It's just direction. Now I will show you. I will show the hold fast again S&P 500, because why in the news they always speak about S&P 500? Why? It is just because it is very, very famous, and they always have this in their conversation. The Dow, because it is the 30 biggest companies in the USA, and what they are doing as in stock market, it shows you the snapshot. It means the summary of the market, because these companies, they are not from the same sector. Okay? For example, Bank of America, it's banks, a bank sector or financial sector. Johnson & Johnson, it's a drug industry. Okay? So each company gives you its sector and it is represented in the Dow Jones. Ugandan Knuckles, how are you? Hafid Bouachi, how are you? And let me right now go to speak again about S&P 500 very quick, because maybe this guy comes at last. I will show him, and then we can speak about something else. Okay, so let's go back to our chart. Now this is Russell 2000. What does it mean, Russell 2000? It means 2,000 successful companies that are small in America, and you call them Russell 2000. Now this is the ETF. ETF, it means you can trade it, you can buy it, you can sell it short. This is the ETF. This is not the index, because the index it is just you can't buy the index, but you can buy this. That's why for you guys, why I show you the ETF, because if you want to sell short or you go long, you can do that with the ETF. Now the guy, he speaks about S&P 500. I told you, because S&P 500, it's 2 days low from our correction. Correction, it means when the market in the beginning of the year, in February, it goes down. This is the bottom. Now for me, I put a line and I say the highest is called resistance line, the lowest is called the support line. If it goes below, it means we are in a bear market. If it is go above, we are in a bull market. If we are in the middle, it's correction. Okay, so this is just to show the guy this information before we go. Before we go to something else. Now, Hafid Bouaishi say, I am good, thanks you. Welcome, man. Thank you very much for coming. Uganda Knuckles say, why ETFs are going up since October 2018? As of yesterday, there are 25 ETFs. Now, listen. Speaking about ETFs, do you know how many ETFs do we have? We have thousands of ETFs. ETFs, it is just it is like a stock. A company makes an ETF, and this ETF represents something. So you say to me there are 25 ETFs that are doing good. Okay? But this 25 ETFs that are doing good, out of thousands and thousands of ETFs are doing bad. So you are not going to go to some ETFs and buy them, but we try to see them one by one. Okay? And don't see the daily. Okay? Don't see the daily what ETFs have done in the day. You should see them in the year. Okay? Now, after this, now I will take you to the sectors. Okay? I will take you to the sectors, and I will show you this, the sectors, what they are doing. Are they doing good or bad? Now, Ugandan Knuckles, you can take this starting the same day. Now, listen, Ugandan Knuckles, you can give me the link to where you find these ETFs, and we can discuss them, because I know few of them. But right now, you can put the link, and I will check it later. So right now we are going to see the sectors. Sectors, it means the general sector, what they do. Okay, so let's see the sectors. And please guys, please have your attention right now. And please, this video, if you you are watching now with me and you are asking questions, but tomorrow you can watch again the video and see, and you can put these indexes or these ETFs into a portfolio, and you can follow them in the future. At least you know what they are doing. Okay, and let's see here. So Uganda Knuckles, send me the link, because I see a lot of going up, but there are a lot of that after these few days, 1 week or two, they go down also. Not all of them, but they go. So right now I will show you the sectors. It means here in America, the sectors, what they are doing one by one. You can do that by yourself. You can search and you can do, but the problem, you should know if they speak about the whole year, which is year to date, or they are speaking about just the day. Because don't worry about the day, because the day, sometimes they go up, sometimes they go down. You will be confused. Okay, so in order not to be confused, you should see the sectors. So I will go to the sectors and I will show you. We go very quick about this. Now, industrial sector, you see, it falls and it is doing so bad. You see, it's doing so bad. Health sector, because this is the problem. Okay, because this is the problem. They say to you they are doing good because of this. Because, for example, healthcare sector, it didn't reach the line yet. It didn't reach the bear market yet. That's why if you take the year to date, it could be today going down. Consumer discretionary, it goes down. It goes down. I will take this because it's go down today, 2 days. Now, material sector is all down. Technology sector, let's see. Yes, it crosses today. Technology sector, it crosses today. Spider fund, it's going down also. Energy sector, it is always bad. This, as you can see, it's always bad. Now, for you guys who don't know why I put these two lanes, the first lane is called the resistance line, and it is the high of January, and this is the low of 9 February where we have the correction stops. That's why I put this. So if you see these two lines, what does it mean? It means that this is the correction. If it goes down, it means bad. So the energy sector, this is the energy sector, it has a political problem. Trump asked Saudi Arabia and the other countries to put more oil into the market, and there is a collapse in the prices. It was 85 the barrel of oil. Now I think it's 45. So it lost 50% just few days when they put more oil. So that's why this is energy sector is a problem. Okay. Now consumer staples is going down, as you can see. Financial sector, as you can see, is bad. It is too bad. Now utilities, it goes down and it is better than the other. This is one of them. One of these, they say, one of these ETFs. Mining and metals and mining sector, you see, it's too bad. Let's see, this is 9 of January. Yes, 9, no. So this is the line. So you see how metals and mining are doing so bad. You see, so bad. See the line where they go. Okay, you see that? It's so bad. Healthcare services sector is doing bad. It just nearly touched the line. Bad. Technology hardware bad. Home builders bad. Okay, is doing so bad. Home builders was so bad from the beginning, so they don't go even more up and up. They are just trending into a smaller trend, and then they collapse. Software and services going bad. Let me see, is this 9? Oh no, okay. So they are into the correction yet. They're still in the correction here, but they might go down. They were in a bull market before. Software and services, they were so good before. Innovative technology down. Insurance down. Biotechnology down. As you can see, if we put the lines here, we'll put the line here. You see, it's going so bad. Bad. Oil and gas equipment, as I told you, all the energy thing is doing so bad. S&P internet is going bad. Let's see, continue. Healthcare equipment bad. S&P telecom bad. Capital markets bad. Oil and gas, all this is just because of Trump. All this, it just 1 month. It's all Trump. Pharmaceuticals, as you can see, too bad. As you can see, 1 week, which is so bad. Aerospace and defense bad. Semiconductor bad. Technology bad. Transportation bad. And retail bad. Okay, so this is the general sectors. You can find some ETFs that are doing better, but understand that if we are in a bear market, everything will collapse. Okay, so this is just an idea. Oh man, Ugandan Knuckles. He said, "Hello Karim, I am talking about Canada." Why you are talking about Canada? I thought you are talking about our market. That's why I begin to show you that all the sectors are down, and you say to me there are 25 ETFs doing good. That's why I say where are these ETFs? You can find 1 or 2 or 3 in our market, but it is so bad. Okay, our market is so bad. Now, he said also, does USA government shutdown affect stocks? Yes, it might affect, but our problem, you should see. I'm telling you something very important. Try to make the difference between news and the trend. I will show you right now with some explanation what is the difference. Okay, now sorry for confusing you. No problem. Listen, Ugandan Knuckles, you hold fast, say death crisis. No, I don't know about death crisis. I'm not specialist about death. I have no idea. Now, Ugandan Knuckles said, does USA government shutdown affect stocks? Now, I will show you if the news comes, what's the difference between news and the trend. Okay, I will show you in a minute what's the difference. Okay, so look at this. Okay, now here I will speak about the news and the trend. Okay, so I will just give you, for example, okay, I will give you the earning news just to make sure you always have this earning news. Let's say we have a stock. It's going down, it's going down. Okay, like this. Let's say the stock was here $36. It goes down to 22. So today here it's going down 22, but today we have the earning news. So earning news has nothing to do with the trend. This is a trend. Okay, a trend, it means that people are selling because of different reasons. People are selling short. People are just selling off their shares. They don't want to stay in this stock because it's going down. They lose a lot of money. So this is called selling off. And there is selling shorts. Short sellers each day, they sell short because they think the stock is going down. No, okay. Now, what if the next day the stock begins here? This is here, all this is a gap up. Now, a gap up, and the stock now is $30. Or let's say $32. Now, a gap up is the result of the news. It's something sudden. It happens because of the news. Okay? It has nothing to do with the trend. That's why some people they just let's say they buy at the end of this day $22. They just try to gamble, and they say, okay, let's buy it. Maybe it goes up because they have heard some news that that this company is doing good in this quarter. Something happened or something like that. So this is the earning news. Or if it has a bad news, the stock can opens here with a gap down. So this, let's say here at let's say $15 or $16. Now this is a gap down because of the news. So the news are short, are sudden for the day. Okay? But the trend, this trend can stay, for example, 6 months. 6 months is going down, but in one day it goes up. So this going up or going down is because of the news. So don't mix the news with okay, any kind of news with the trend. Now, you said, for example, you know why I give you this? In order to explain what you said about the government shutdown. Okay, I will just take this example and I will give you the situation of now. Okay, I will explain now what's going on in the market, and I will explain. This is the resistance line that we showed you. This is the support line, and we say that the stock was doing good at the beginning of the year, and then it began doing like this, and then now it go down, it crosses here. Now let's say a few days like this, few days here, the stock is still going down. Now, let's say next week or the other week, we have what we call government shutdown by Trump. Government shutdown. Just an example, okay? Now, since it is this, in general, it is bad news. Since it is bad news, in general, okay? So, short sellers, they come to this day and they short it down like this. It could be like this. If it is in the day, for example, today in the morning at 9 o'clock, Trump has given this news that we have government shutdown. At 9:30, people, what they do, they sell short heavily. That's why the stock the ETFs and stocks should be going down so bad in this day. Let's say it is Monday. But it doesn't mean that we should see candlesticks like this each day, each day, each day, each day. No, we don't do that. We should see it only in one day or two, because the news are just for 1 day or 2 or 3. It means just sudden news. Or let's say this. Okay, let's say this is an example. Now, what if this news comes in the afternoon? Let's say this news comes at 5 p.m. on Monday. Now, 5 p.m. on Monday, there is a news. From 5 to 8 o'clock, there will be the gap down, because the people, they short sell here from 5 to 8 p.m. Let's say Tuesday is Christmas. No, the market is closed. On the 26th, the market, how the market opens? It opens with a gap down like this. Here. A gap down. And you see all this is a gap down. So this is the news. Either it comes in the afternoon or in the morning. It depends. If it comes in the morning, it should be a candlestick like this. Okay? A very, very long candlestick. So this is type of the news that will happen. So we will never know if Trump will shut down the government, but expect a bloody day. Expect a bloody day. Whenever there is bad news, expect bloody days. When there is good news, also, you expect good candlesticks also, which is green candlestick. Okay? So, hope, guys, you have an idea about the difference between news and trend. Okay, so let's go and to see. So, as I told you, we will continue. So I just see Vcash hold fast, speaking about death cross. Listen, for me, I am not following what we call moving averages. So before you understand this, moving averages, there is long ones like 500 days. When you say, for example, MV 500, you see it in the chart, for example. Okay, it is just the sum of the closes of 500 days. trading days. They take them all and they put a line. Okay, I will show you. And if the stock market is below this line, it means that the market is doing so bad, like a bear market. But understand, hold fast. Try to take from your mind all what you know before. Try to follow what I showed you right now about how to know the bear and how to know the bull and how to know the correction. This is more precise information, and you will never ask anyone else. Because if you are going to do moving averages, it's just the sum of days. There are 500, there are 400, 250 days, 20 days, 14 days. You get all these lines are changed when you change the number. This is so bad. So try not to follow these moving averages. It doesn't help you make money. It doesn't help nothing. But what I showed you is exactly, if you follow, you understand what's going in the market, and then you decide what to do, and then you can make money. Okay? So this, what we call death cross, is just when death cross. Say, I will show you right now. Okay, try just to check. Okay, check just this. Now, this is the line, for example. This is the line, the moving averages. Let's say it is the moving average 500 days. 500 days, it could be more than 1 year, it could be nearly 2 years. Okay, so this is the moving averages, and this is the stock market. Was going up, it means it's doing good, and then it crosses. Now this here is called death cross, and the stock market collapse. You see? But for me, I'm not using this 500. Why should I use 500 or 400? Because if you use 400, it could be like this. If you use 200, it will be like this. If you use 14 days, it could be like this. So all these lines, I don't use them. I don't use moving averages. I don't use them. They are worthless because they are lagging information. Okay? But thank you very much for the question. Now, Free Trader said the market tried to rally today when the New York Fed anticipate the fact that the FDA will consider reviewing the interest rate hikes. But understand, Free Trader, that the federal has made 4 raises this year. Only 2018 they have made 4. It means the interest rate is going up and up and up and up. And this is not good for the investors. I will show you why. Okay? So I will show you why this is not good. Now, let's say an investor, he has, just an example, okay? He has a stock that it is going down. Now, let's say he bought it here at $30. It goes to 45, the beginning of the year. This I'm speaking about what happened to this year. Okay? So, this is the resistance line. It goes there, and then this is the correction line here, which is the support line. But his stock is going down and down and down. He bought it at 30. Now here it's 25. Now what does it mean? It means for each 100 shares, I don't know how many shares he bought, 1,000, 2,000, 10,000, wherever, he will lose $500. for each 100 shares. Okay? Because from 30 to 25 is $5. $5 multiplied by 100 is $500 loss. Now, this guy here, he stops here and he looks at the interest rate. Interest rate is going up. Interest rate was 3, 3.5, 4, 5. It might be 6, depending on what is your credit score. So interest rate is going up. Now, what does it mean? Interest rate is going up. How this? Because interest rate, the people are looking for bonds. Bonds, what are they? It could be city, it could be the state, it could be treasury, it could be anything. The bonds is you lend money to the government. You lend. So you give the money and they give you a percentage. Let's say they give you 7%. So for you, let's say they give you 7% each year. So for you, you tell yourself, I'm having this stock and I'm losing too much money. Why should I stay with this stock? Why I don't go to bonds? I buy all these bonds. I am sure to get 7% of the money, of my money. That's it. And each year I get 7, 7, 7. I don't care about the market, what will be doing. Maybe it's going down like this 25. Maybe it goes to $10. So I lose all my money. So some investors think like this. Investors, big investors, it means those people who have 50 million, 100 million, 1 billion, 2 billion, understand that the people, they have a lot of money. Not you have 10,000 or 20,000, you think that this is money. This is not real money. Okay? So this is why interest rate is too bad for the stock market, because it attracts people, investors, to go to buy bonds. So in order to buy bonds, what they do, they sell off. This is the problem. That's why the market is going down. There is a sell off, and it will continue. I think if there is a big change, a big reverse, the stocks will be going down into bear market. This is in general, okay? This is not a confirmation. This is just what I see now. 1 week, 2 weeks, 3 weeks, 1 month, it can change. Everything can change. Okay? But I'm speaking about now what did happen. But for the people who go there, even if they see that it's good, it's good market, they will not go that fast. They will stay, I don't know how many months or how many years. Okay? So thank you very much, Free Trader, for your question about... But understand that the people who are going to buy a house, they will have a problem because interest rate will be higher. The homes will be higher. So if you don't have a good credit and if you don't have a good job, you are not able to buy houses. So the housing market will be going up and up and up. Okay? So we have another question. Cash hold fast. Can you explain junk bonds? Now listen to me, hold fast. Listen, I am not specialized in bonds. I don't do them. I don't work with the interest rate. Junk bonds, I will just give you an example because you have asked. You have asked the question. Okay, I just give you an example. Why do they call them junk? It's like you remember me of junk silver. If you've heard about junk silver, I will give you just this word junk. We have junk bonds and we have junk silver. For you guys who knows about coins, I will give you, because I know coins a lot and I collect coins. So I will tell you examples, just to know. So what does it mean, jank bonds? Jank bonds is when they give you a high percentage, like for example 18% or 25%. You think this is a bond. You think to yourself, oh, they give me 25%. It means if I put $10,000, after 3 months or 6 months, depending on this bond, I will get $2,500 in whatever month, in 2 months or 6 months or 7 months. Now, this is what we call jank bond. Now you say to me, why they call it jank? Isn't it good, this one? Is it good to get 25? Why I should go to get 7% and these guys are giving me 28, 25 or 18 or 50? So here is the problem. For you, I know maybe since you speak about bonds, you know about the price. Understand that this, let's say the price is $25 for this bond. Understand that this bond can go down. Let's say after 1 year, this 25 becomes 20. Although they give you 7%, but they don't give you 7% about 25, they give you 7% of 20. So you understand that maybe you are losing your money. You are not making money. Because if you have 25% after you can do it, you can do the calculation with your end, because I don't have time to do calculations. So let's say you bought $2,500 jank bond, okay, and you try to see how much is 25%. You put it here, and then after 1 year, your jank bond is $20. It means it is only 2,000. It's not 2,500. The price has gone down. So 2,000. You try to see how much is 7%. You put it here, and try to see yourself. Have you made money? Yes or no? You will be surprised that you are losing money, because 7% you get it from 2,000. Yes, they told you it is 7. It is 20. No, it's 25%. No, I'm sorry. 25% is the same, but 25% out of $25, like a bond, and like $20 is not the same. And instead of making money, you lose money. That's why we say jank bond. You lose money because you are getting 25, but it is not the same price. If it is $25 and you get 25, yes, you can make money. But if it is $20, the price now, and you get 25%, you will see that you are not going to make money, because you lose in the price. You lose in the price of your money that you put. You put $2,500. Now it is $2,000. So you lost $500. Now try to see 25% after 2,000. Is it less than 500? If it is less, it means you lose money. That's why it is called jank bond, because they give exaggerated percentage. This is exaggerated. Some people, they don't understand what's going on, so they think it's just because they give them. People are not stupid. Okay, people are not stupid. When they sell you jank bonds, it means that there is something wrong, and you will end losing money. Now let's go now to jank silver. Now, for those who know silver, let's say you have $50. This is $50, but you see, when you see the information the picture here, whatever is in the dollar or half dollar, it is silver, but the information, it is not clear. Let's say it is 1925, the 5 is not clear, or the 2 it's not clear, so it is half dollar, yes, but all the information that you see are bad. You can't see. This is called junk silver because people, they buy it because of the value of silver. Understand? For example, half dollar. Half dollar, what is it? It is 50 cents, okay? But these 50 cents, the value of silver, let's say now is $14 an ounce. So if you want to sell it, let's say you sell it with $2.10. This is, you sell it in eBay or something like that. Okay? Now, this is called junk silver. It means it has no value as a coin. And people, most of the people, they don't buy junk silver. They buy nice coins that has a value. Now, if this coin, 1925, if it is nice, you could sell it with $300 or $400 or $1,000 or $10,000. It's just because it has a value in itself. Okay? And you can go to some websites, they show you the value and they show you the price. And if you want to know, you can just go to eBay and put any coin that you want to look for, the year and the coin, and you will see different prices. Different prices is just because of the value of the coin, not of the silver. If you want to buy junk silver, you find only it's sold because of the value of silver, not of the value of the dollar, half dollar. Okay, so thank you, and I'm sorry to give you another example of junk silver, but it is good for those who know about silver, about coins. They understand very well what I am saying, and this is good also. Okay, so we have finished with junk bonds. Now let's going with the High Priest. How are you, High Priest? Thank you. Thank you very much for coming. So let's see what he said. He said, I have a CFD account in Europe as I am European. I know that you guys in the USA are not allowed to trade CFD. I am planning to stay in the USA for 6 months next year. Do you think my CFD account will? No, listen here. Who tells you that CFD are not allowed in USA? Who tells you this? I have no idea. CFD, listen, the High Priest, try to understand why we use CFD. Okay, I will just be blocked from there. No, don't. You should. Here we don't use CFD because we have stocks. Now I will explain to you CFD, the High Priest. At least you will not ask anyone else after me. Okay? If you have another question, just ask. I will ask you. I will just explain right now with CFD. At least you will understand. Okay? Now, please make sure you see. Okay. Okay. Now this is Europe or any other place. It's not just Europe. Any other place, Asia or Africa or any. Now here we have a broker in Europe. He has CFD and he say, oh, buy Facebook as a CFD. Now, here, because this broker do not pay, he do not pay US exchange money. He doesn't pay. He is not a broker that pay money, so he can't give you Facebook stock. But he gives you something similar. This is similar. It means it's the same as Facebook, but it is not Facebook. Now, if you are here a broker of USA, when you say Facebook, it means you are buying a true Facebook share. Now, this broker here in USA, it pays. That's why you can reach the market. For example, here in USA, why should I go to buy CFD? CFD is not a real share of Facebook. You don't have a certificate. You don't have nothing. This is another game they do, and it is leveraged. Leveraged, it means you put little money, but this money can be wiped out. You can lose all your money in a few minutes or a few days. Okay? So CFD is for the people who can't reach USA market. For us, we can buy any stock and a true share. It means we can have a certificate. Certificate, if you want, for example, let's say you want to buy 100 shares of Facebook and give it a gift to your wife or to your friend or to your father or to your mother. This is 100 shares certificate. It means it is a true certificate. Without having a broker, you can buy a certificate and you keep it, and after 10 years or 20 years, you can get this certificate and you can get the price of that day. So please, CFD is another game. It's not a true stock. When they say to you, you have bought CFD Facebook, you are not buying Facebook, you are buying something similar. This is just another game. So you are not in real market, and it is leveraged. Leveraged, what does it mean? It's like forex and futures, currency pairs. It means you buy little. Let's say you buy $200, but this $200, if you don't know how to trade, it can be wiped out. It's like options, like futures, like forex. So hope you understand this. And as I told you, it's not. I don't know about America ban CFD. No, because no one wants to buy fake Facebook. Why should I buy fake Facebook with CFD? CFD, it's another thing. It's just imitation of the stock market, but it is not real. You are not in a real market. This is what I want to show you about CFD. And because if you this account is online, and when you come to America, you are going to, for example, to study, or you are not a USA citizen, or you are not a green card holder. So I don't know about CFD that it is forbidden in America. I don't know. Maybe it's not true. I don't know who tells you this, but it might be not true. Now, thanks Holdfast for all your questions and all the guys who asked. Wiseman said, I heard that the older you are, the more you should put more money toward bonds. Now, listen. Bonds are good in bear market. In a good market, it's not good. Because in order to know this, you should see 100 years or 150 years. I will tell you, you go everywhere and you check the difference into the chart. I will just show you just an example, okay? Just to show you, you can do it yourself later when you have time. Try to see the comparison in the chart. I will just give you from my mind. from my mind because I know about this. Now, let's say this is the chart, okay? Now, this is the stocks are doing. Let's say 2018. Let's say 1918. This is a 100 years chart, okay? This is what, understand that in 2000 here, let's say when we have the dip here, in 1934, Dow Jones was $40. Now it is, let's say, 22,600. So you see, $40 to 20. This is the low. I think in 1934, after the crisis of 29 here, 1929, and then 30, 31st, 32nd, 34. This is the deepest it goes. Now, let's say you find, for example, here, this is gold. You find maybe, for example, bonds like this. So you might find, okay, that that bonds is doing bad compared to stocks. These are stocks here. Stocks. Gold, bonds, and everything is down. You can check this chart and you say, and you compare stocks with gold and bonds. You will find online. It will give you many years, and that's why Warren Buffett has not bought gold. He doesn't invest in gold because he say if you buy one ounce of gold from 1918 to 2018, 100 years, you will have only 1 ounce of gold. The gold doesn't change. It means the ounce, 1 ounce, it will be 1 ounce. There is no change. Even though the gold changes in price, but it is little compared to stocks. Okay? So this is the difference. Now, wise men said, I heard that the older you are, the more you should put more money toward bonds. Now, maybe the people who are 65 and more, they can buy a lot of bonds and they stay with them. But understand that stocks are giving the most money. That's why Warren Buffett, he stays with the stocks because they give him dividend. So I will just give you how Warren Buffett get his money. And in USA, because he study economy, he has I think a degree in economy, so he has things that are very, very simple to know, and it will help you in the future. Okay? So that's why he keeps with dividend than bonds, because the dividend is like bond for stocks, but stocks can go up too much, but the bond, it doesn't go that much, as I showed you right now. Okay? So, now let's go to the next question. Vcash, hold fast. What's the best sector to be in a recession? Listen. Vcash, hold fast. I have showed you all the sectors are going down. So I don't think that will be a sector that it is doing good, except in the future if things change. But if you follow my strategies, you will know which sector is going to be up or down. But most of the sectors are going down. So you should follow each week. You should do my search, and you should see. You should put a portfolio and follow them, and you should do my strategies, or you should do my golden subscription or silver subscription, and you ask questions and I will give you answers. Because understand the Vcash holdfast here, I am not giving you teaching. I don't teach here. I just give you general information how the market works, what you should do. But in terms of techniques, explanation, what is for, what is not for, I will give to my subscribers. Okay? To my subscribers only, because those who are with me, it means they are following what I say. Okay? But and if there is something new, I will tell them. For example, right now the markets, I will tell them about everything, what's going on, and what they should do, and what they should use as techniques from my training. Okay? Now, Kaza Nico, how are you? Thank you very much for coming. He said, Brother Kareem, I hold 100 Facebook since October. I am afraid if I sell it now, and it may go up, and I will lose a lot of money. From October, it means you have 100 shares of October. Let's say the 1st of October, and see the price. So, let's say Facebook. Where is October? October. Okay. Let's say you bought it 159. Just an example, okay? I don't know where you bought it. Now listen. Let's say 159. I don't know when. I said, what's this? Yes. Yes. This is the first of October. The stock was 162. Now it's 124. How much you lose? What are you doing? I don't know. I don't understand what you are doing. Are you doing a trade or are you doing investing? So this is a question that you should answer me right now before I continue. So, Kazaniko, you should tell me, what are you doing? Is it investing for 10 years, 5 years, 10 years, 20 years in Facebook? Or is it a trade? If it is a trade, you are wrong. And please, because your question is very private, so please send me your email and explain everything. How much you bought? No, it doesn't mean how much you bought. Whatever you bought, just tell me which price and which day you bought Facebook and how many you bought, and I will explain to you what is the situation. And tell me exactly, are you investing for long term or are you doing a trade? Okay? So here is my email and my website. Just send me an email and I will give you more information, because your situation is private and I shouldn't tell you everything in public. Okay? Now, Metro Money, how are you? Thank you very much for coming. Thank you very much, all of you guys who are coming. Wiseman, I find the idea of bonds boring. Thanks. Yes, listen. I prefer to short the whole market and to make some money than to go to bonds. Bonds is you give money to the government. Man, the government has a lot of money, so I don't want to give them also my money. Okay, it's too much, so it's too bad. It's too bad. But you know, it's part of the game. You know, the banks they begin selling these bonds, and they are very happy, and they are making commissions. They are making, yeah, this is the good thing. So banks are doing. It means they will do good business when there is a lot of people are interested in this CD, this saving accounts, these warranties, and a lot of stuff. Okay, they are very interested, you know, because they sell a lot and they make a lot of money. Now, Metro Money said, what do you think about TLRY stock? Do you think cannabis stock will be a good investment for... listen, I have two... I didn't see stocks, but I have the two ETFs. I will show you right now. Now, are you speaking about USA stocks, or are you speaking about Canadian stocks? Because Canadian stock, they have a lot. Okay, I don't know if you are from Canada or from here. So let's see what's this LTRY. I have seen this. LTRY. I don't find it. Oh, no, I'm sorry. TLRI. I'm sorry. TLRY. I think I have seen it. Oh, okay. Now, if you are looking, now this company, it begins in 2019. As you can see, it's an IPO. It means it is a new company doing that stuff. I don't know what it does, but it's a cannabis and the what we call the marijuana stocks and the other stuff. Now, it was doing nothing until we have the bubble. See the bubble? The bubble, it means a lot of people are talking about this, and they say, oh, cannabis and marijuana is free, just come, just buy and buy and buy. So the people here, they begin to buy and buy when it was 29, 30, until it goes to 300. Do you understand? It was 300 here, $300, and now it is 74. It means 150. It means it lost 75% of its money. So are you telling me, does it have another trend? I don't know. So in order to know, you should use my strategies in order to know where to buy. And as you can see here, 300. The next day, it goes to 176. It means 50% of the money gone. And here, it goes to 123, and now here, 99. This is what we call pump and dump scheme. Pump and dump scheme is people, they asking a lot of people, they buy here, those guys, they buy here first. Because see, all these days, the stock doesn't do nothing. It doesn't go that much. So a lot of people, they buy, and then they begin to advertise here. They advertise, it means by in the news, by TV, by speaking about this TLRY, that it is the best company in the world. And the people, they begin to buy, until it reach in that day, it reached that price, $300, and then they sell. So all these in 3 days, they have taken all the money of all these guys. This is called a pump and dump scheme, and I don't know if they do another one. Okay, so it's very hard to know. So Metro Money, it's better to look for new companies and follow them. I have a way to know if the company is going up or down. It's training level 2. You try to study it. Or you do golden subscription and you have 13 training, and you will know where exactly to buy. But try to see the new IPOs, new companies, because it has gone to 300. Now it is 74. It means it lost 75% of its money. 75% of its money. If you bought that day with $300, you think that the stock will go to $1,000, but the next day you lose all your money. So be careful of that. Yes. Oh, it's a Canadian. It's a Canadian company. Yes. And Metro Money. Stay with me. I will show you the two ETFs. The two ETFs that we are following. Let me find this ETF for you. I have made videos before about marijuana stocks. If you are interested, you can check them. Now look here. Look here. So look here. Now this one, MJ ETF, MJ Alternative Harvest, and Advisor Shares Vice ETF. Now this is a USA ETF. It means all the stocks in America, they put in ETF for them, and they use even Canadian stocks also inside. So this ETF is called Advisor Shares Vice. But understand, it's going down. People here, they think that this, because they legalize in some states in the United States of America, that this will have a bull, but it didn't. And it collapsed. It collapsed, as you can see, with the market, because our market is going down, so everything is going down. Now this MJ, it is Canadian. I think it's here in this. So it's going up before, then it go down, then it go up, then it go down. But right now it's going down. As you can see, it's going down. Okay. Now, we are 2 hours right now. We have spoken a lot. Thank you very much for waiting for that. Now, right now, I will speak about the solutions, and for you guys who are with me in the golden subscription, you will get all the details. It means the ETFs that we short the market. You will find how to use the put options. You will find how to sell short. All these I will give examples, and I will explain. And I will be waiting for your questions in the golden subscription and silver subscriptions for you guys who are subscribed. Now, for you guys here, since it is just a general idea, I will try okay, so let's begin, because we have done 2 hours, and then we can see some questions, and then we finish this, because this is the live session before Christmas, and then we do one next Friday before the end of the year, and we will see how things is going, and we will give you a general thing. The high priest said, Karim, you have been a great mentor to me, and I imagine to many others to quite some time. Do you think when I am in the USA, it would be possible to me to over a drink? Yes, thank you very much. Thank you very much for your invitation. Yes, and and hope it will be okay that they give you a visa or you come like a green holder or whatever. Now let's see. Please now just focus on these 3 solutions that I will give you right now. But for those who want too much details and to know the examples, you should be a golden or silver subscription. It's silver subscription is only $25 a month. It's not a big deal, and you have 6 training for free. If you are in golden subscription, you will have 13 training levels, and plus you will get everything about now what to do, and to have examples about shorting the whole market and doing that other stuff. Okay, so let's go and just explain these 3 things very quick, and then we can just ask me questions later. Now here is my 3. It means 3. Sorry for that, I use another color. 3 solutions that I have for right now. Now 1 and 2 and 3. Now 1, okay, you can use ETF to short the whole indexes, okay. There are thousands of ETFs, and there are hundreds of other ETFs that you can use in order to short. Now this in simple, I'm not trying to give you detailed information, but here it is what for example, if the index is going down, this index is an ETF, we have an ETF here, is going down like now, there are other ETFs that are going up, the opposite. They do the opposite side. Now this I will show and I will explain. I have done a day trade, and I will show you how to day trade, or how to go swing trading using them. Swing trading, it means the whole market, if it's still continuing down, you will be making money. This is the first one. Now second solution is put options. Put options, as you might know, if the stock here, if the stock is going down, when you buy a put option, the same direction, now you will be making money. You make money if you are in the same direction. Your put option is the same direction. For example, the stock is $20, you buy a put option, and then after a few days it goes to $15. So you will be making money because you have the same direction. This is put options. I will explain and I will give you examples. Number 3 is very simple, is to sell short daily. This is for day traders. Now, it's for day traders. If you don't know how to sell short, you can check training level 11 plus 12. With golden, they are free. With golden subscription, they are free. So all of you guys, if you have golden subscription, I'm sorry for golden, or you have silver subscription, you will understand all these 3 into details and examples, because here I can't just give you training for free. Here I'm just trying to show you what you should do in the future. And the best thing is day trading, because day trading, either you can go long or short according to the day, so you don't care about the bear market. But this number 1 solution, number 2 is for swing traders. You can stay 1 week, 2 weeks, 1 month, 2 months, 3 months whenever the market is bad, whenever you are making money. This is a swing trading. Now, day trading is if the day is good, you make money. If the day is bad, you make money. Okay? So this is the information I want to tell you. And listen, a lot of you guys, I know some of you are having golden or silver subscription. You know, when you follow, I will try to give you examples and to show you how to make money right now. Because if you stay with going long, because just someone is trying to tell me, oh, what is the sector that's going up, or what is the stocks? It is so hard right now to find these kind of stocks. And even if they go 1 day or 2 days or 3 days, they can collapse at any moment, because the whole market is shorting. How can mutual funds are selling and you go to buy? You are against the mood of the market. But if you are a day trader, each day is different from another day. Let's say stock market has gone 5 days in this stock red. But today, you can make money because the stock goes up. But the other day, it goes down again. Okay? So, day traders, you can make money in this volatile market very, very good. And this is your opportunity to make money right now. Okay? In the trends, when there is a big trend, a big bull or big bear, you can sell short for long, you can put options, you can short the whole market. All this is done. But day trading these days is very good. You should watch the news in the morning. See stocks that are having bad news. And you just go in the morning at 9:30 and check if these stocks are going down. If they're going down, you can make money easily. Okay? So, in general, you should follow the mood of the market in general. And if you are having stocks, you should follow the stocks what they are doing. But in 99.99, all the market is going down. Okay? But it doesn't mean that when I say going down, it means, oh, you just sell short or put option and you stay 1 month or 2 and there is a reverse. The stock market is going up again, very, very good, and you stay with your puts or shorting the market. Or no, I didn't say that. Because for me, I am doing a trade. A trade, it's not an investment. It's not investing. Investing is when you look for the company and you are thinking about this company for, as Warren Buffett said, 20 years. It means you are thinking about the long term. Let's say you say, oh, Google is a good company. So when you invest in it, it should be for 5 years, 10 years, 20 years. It's not for 1 year. Okay? So this is what I am telling you, guys. So you should understand, and you should not confuse investing with trading, because trading, you get your money now. You don't expect to stay, for example, 5 years, 10 years, 20 years, and then you make money. Okay? You will never know how the market will be. If it is a bull market, almost all the stocks will be good. Some good companies will be good. Some good companies become bad and they go bankruptcy. So, like we have seen GE, General Electrics. 110 years, it was doing good. And it was one of the oldest companies in Dow Jones, but it was kicked off and it was replaced by another stock. You see that? 110 years, and then this stock is not doing good. So understand that things can happen in the market. So don't be stubborn in one direction. This is too bad. If you are an investor, you put your money like 401k, and you put your money for 20 years, 30 years, 40 years, understand that at the end you will be making money, because the market, even if it goes down 1 year or 2 or 3, it will go up again. and someone tells me, oh, the stock market is going down, can I buy now? It will go up and make money. I say, who tells you that the stock market will stop now? Maybe it's just the beginning of the bear market. Maybe it will stay 6 months, 1 year, 2 years. Who tells you that the market will go up right now? Okay? So no one knows. So always don't be stubborn. If you are a trader, we have 2 ways. If you are a trader, I will just show you this, the last thing I show you, and then we finish this session. Okay? So, look at this. I just to make sure you understand investing, because there is one guy here, he bought Facebook in October, it's going down, and he told me, I will not sell because it's going down, I will lose. Okay, now, investing and trading. Please make sure that here we are traders. We are trading here. We are not investing. Investing is you should see the company. This is one thing. Company, you should see competition, you should see the earnings, a lot of things about investing. I have explained a lot about this investing. If you want to see my videos about investing, put investing or investor, and in my channel you will have a lot of videos about this. Now, the company, and you should see long term. Long term, Warren Buffett said it could be 20 years. Okay? It's 20 years you stay. 5 years, 10 years, 20. Because you believe in this company will become bigger and bigger and bigger. So you don't see the fluctuation of the years. If a year was bad, you don't sell. If 2 years here, you don't sell. Like for example, in 2008, the stock market lost 50% of its stock, of its value. But after a few years, it will gain back the money and it will go up and they make money. Now, trading is different. If you buy a stock today here, you buy it. You should put a line like this. That's why I use always a line. This is the buy line, always. And put it with green. Just a line like this. Let's say I bought it here, the stock, at 165. This is for the guy who bought Facebook, FB. He told me he bought it on October. Let's say October, it was 165 for Facebook. Just an example, okay? $165. Now, what do you expect? A trader expects that the stock will go up and he makes money. Now, what's the thing that you should put? You should put stop loss. Stop loss. It means how many points or dollars the stock will go down and you sell. For example, you say 160. So you risk $500 in this trade. Okay? From 165 to 160. But this guy, it crosses the stop loss because he didn't put stop loss. Now, let's say it is 127. Just an example. So from 165 to 127, how much you lose? Okay? It is $38 for each share. It means now you are losing 3,800. So instead of losing only 500 and exit and go to another trade, you are going and you say this hope thing. You trade by hope. You say, for example, what if the stock from 127 it goes up again? This is a possibility, right? Yes. But I ask you something else. What about Facebook go to 95? What about this? Are you going to sell or no? So instead of losing $500 in this trade, you are losing 3,000, 5,000, 10,000, and you are losing all your money. Because it's not because you buy Facebook, because Facebook is a good company, it makes money, that the stock will be making money for you. Because don't confuse a company, what it makes and how much money it makes. Because Facebook is always making money. This has nothing to do with the stock. Stock is traders who decide for the stock. Okay? So hope you understand that you are doing trading, not investing. If you are doing investing, you should look for all the criteria of investment, put your money and sleep. Okay? So at this stage, thank you very much for all. I put my website and my email. Please, if you are going to see all my details, this weekend I will prepare for you guys two day trades. One is shorting the whole market, and one is going long as a day trader. And I will show you how to make money easily. It means with day trading. Or if you want to go long, I will show you how to short the whole market and how to buy puts. This is what I will explain in this weekend for all my subscribers. Okay? And if you are not subscriber, you can just take the first training for free. Or you can, if you have questions about whatever thing, please, here you have my email. Hello there, Nazulanucci. Where have you been, man? You have been like hiding the whole day. You don't ask any question. So, and since it is the end of this thing, Merry Christmas for you, and hope you join your families and you have fun, and don't think too much about the money in this time. Either you lose money or you make money, it doesn't matter. The family is more important than making money. And then after you have fun, and then you come back to the stock market and you fight the market and you try to succeed if you continue trading. For those who stop trading, for those who don't want to stay or to, it's their choice. But most of the people who don't continue, they always lose in everything they do. Okay? In a job, in a project, in a business, it doesn't mean that you fail one time. It means that you fail all your life. No. All the people who succeed, they have failed many times. Even Warren Buffett, who is now one of the biggest investors in the world, he make the first thing he has done, he has bought for 20 years, he has bought this mills, making tissue and making stuff, and he lost a lot of money by buying those mills, because at the time people are these companies go bankruptcy because it's not a good business anymore. Those companies that they have mills, they make tissue, they make clothing, and they make a lot of stuff. Those companies, they collapse. But Warren Buffett, although he knows economy, he read books, but he doesn't succeed. He does gas stations before and he doesn't succeed. That's why he make a lot of attempts until he bought insurance company, which is Geico, Coca-Cola later, and then he began to make money. Okay? So don't be like always confused. Try to learn. This is the most important thing. Try to practice always. Even in virtual account, even if you don't trade, even if you have money in your account, you don't want to trade, don't trade. The most important thing is to practice. And then when you see the money coming, and you understand that you are ready to trade again. So thank you very much, and Merry Christmas for you guys. And thank you very much, Djellala. I know he is a good listener. He is silent always. I don't know he's eating or drinking. I don't know what he's doing. But he is a good listener. So thank you very much, guys. For those who didn't watch the whole they come late today, you can watch it, this video, you can watch it tomorrow, and I explain a lot of things for today. So thank you very much. And as always, here my email. Send me an email and watch my videos daily, because I always put videos on YouTube, and sometimes I give some information about the market or what's going on. So you should just watch, especially Monday and the days after Christmas, before the market ends. It will be, I think it will be bloody days. I don't know it's up or down, but for sure it will be bloody days. So if it's going down, you can make money for sure, because if things go down too much, you can make money. I have made money these days where the market is so bad going down, and I will put the videos for you guys who are subscribers, and you will watch them. Okay, so thank you very much, guys, and happy Christmas, and hope you join your families and you have a good time. And then when all this fun finishes, and then you come back and we continue our lessons and sharing information about the stock market. Thank you very much, and see you next Friday.